All the pundits, especially the Democrats, they can't understand why Harris didn't win. Because the economy is so great. Just look at the government numbers, and that proves it. All these numbers are a function of inflation masquerading as growth. The real economy is weak. It's been weak for a long time. That's why people are struggling, despite the fact that they tell us that the GDP is up and the economy is getting better. So, yes, we can get more fake economic growth, but at the end of Trump's term, and all the problems he was elected to solve will just be worse.
Volatile week for markets. Risk assets have been up following Trump's victory last week. Although experts claim that the debt levels will continue to rise regardless, deficits may also widen. What's next for the economy? What is the Trump trade? According to Peter Schiff, he is a chief market strategist at Euro Pacific Asset Management. Welcome back, Peter. So Trump won. You've been supportive of Trump. You made many tweets about this over the last couple of weeks. Let me read this one particular tweet. I guess it's called X now, but you can't say X'd, so I'll say tweeted. There is no doubt Harris would have been worse for a whole lot of reasons. That's why I supported Trump, but I'm not delusional about what's coming next. The shit was going to hit the fan no matter which candidate was elected. Well, welcome back, Peter. Good to see you again. But what's the shit you're talking about?
Well, we've been kicking the can down the road for a couple of decades now, going from bubble to bubble. And that includes when Trump was president the first time. I remember when I voted for Trump. I was hoping that maybe he would actually be able to cut government, and that, the fact that he wasn't a politician, he would not behave like one. I was wrong on that. But he ran on a platform of cutting government, reducing government spending. He had something called his penny plan. He was going to cut, every year he was president, he was going to cut spending by a penny, 1 penny out of every dollar, which wasn't even enough. But of course, he didn't do that. He ended up increasing spending by 4 cents on the dollar for the first 3 years. That's, not counting COVID. If you count COVID, it was something like 16 cents a year because spending blew up so much in 2020. But even before we got to COVID, government spending was going up under Trump. The deficits he talked about paying off the national debt as a candidate. He ran up a lot of debt. The debt went up 50%. The budget deficits went up 50% in his first 3 years before they, went through the roof during COVID. So he did end up setting the record, which Biden just broke, for the most amount of debt added in one presidential term. So he expanded government. In fact, even when the Republicans had both houses of Congress, they increased welfare spending in addition to warfare spending. He added a department. He added the Space Force. I mean, he didn't eliminate a single agency or department. And so I think that now we're in much worse shape. The economy is far worse than it was in 2016. That's why he won by a wider margin. And the reason he won the first time, and the reason I predicted he was going to win the first time, and I predicted again, is that I knew the economy was much worse than the media was portraying, and the Federal Reserve and Wall Street. And the same thing is true now. We have a horrible economy beneath the surface. And Trump just showing up is not going to fix these problems. And neither will simply cutting taxes the way he has advocated. Because most of the taxes are not really growth-oriented. They're consumption-oriented. You're cutting taxes on overtime, on tips, on Social Security benefits. So all this money is just going to be spent. And since we already have record trade deficits, the trade deficit we had last month, merchandise trade deficit, was the worst in history, with the exception of 1 month right after we did the COVID reopening. But we've never been more dependent on imports than we are right now. And if we just give people a bunch of taxes, they're going to spend more money on imports. Now, yes, the imports will get more expensive because Trump is going to put tariffs on those imports. Yeah. But we're still going to import them because we don't have the ability to produce the stuff ourselves. We're just going to have to import more and pay higher prices with the tariffs. But the other problem is the tax cuts are going to blow a big hole in a already, more than $2 trillion a year deficit. When Trump came to office in 2016, the annual deficit spending was about $650 billion officially. Now it's well over $2 trillion a year officially. And when Trump came to office the first time, the Fed funds rate was 0.5%. Now it's 4.5%. And the yield on the 10-year was 2.5. Now it's getting close to 4.5. But rates are moving up a lot higher, so we're going to have much higher interest rates with much bigger debt. And Trump is talking about mass deportations, which I'm all for having a strict border, and but we also have to be cognizant of the fact that most of the jobs created under Biden were for illegals. That's kind of where they came from. And so if we kick them out, who's going to do that work? And what are we going to have to pay Americans to come off of welfare and take those jobs? Yeah, sure. There are some people who are on welfare that will kick out, and there's some criminals, and that'll be good. But I think overall, we're going to actually do more harm because we're going to deplete our labor supply, and that's going to further drive up the cost of production in the United States. So there's a lot of stuff that's going to happen. And remember, the underlying problem with the country is that we spend and borrow too much and consume too much. And inflation, which wasn't as big a problem when Trump won in 2016, is a huge problem now because all the chickens have come home to roost, all the QE, 1, 2, 3, all that, COVID. Now we're dealing with it. That's why Trump got elected, because inflation was really bad. And that was harming people, but it's going to get worse because his policies are all highly inflationary, and there's going to be a lot of pressure on the Fed to monetize these exploding deficits. So I think the markets have got it wrong, to think the dollar's going up, gold's going down, Bitcoin is surging because they think they're going to have a Bitcoin reserve. They're going to make Bitcoin profits tax-free. I mean, I certainly hope they don't do something that stupid. But if they do that, that's also highly inflationary, because where do they think the money is going to come from to buy Bitcoin? They got to print it. So that's just more government spending, except they're spending it on nothing. They're spending it to make people who own Bitcoin richer at the expense of people who don't.
Are you liking this video so far? Well, video creation is challenging. So let me tell you about today's sponsor, InVideo, which is changing the game for video creators like me. And if you're a content creator, then listen up. I know that creating videos can be complex, but InVideo AI V3 changes that. With new generative capabilities, you can now create full-length, publish-ready videos from scratch using simple text prompts. Whether you're telling a story, explaining complex topics, or creating product ads, InVideo AI V3 puts you in control, bringing your ideas to life in minutes. Unlike tools like Sora and Runway that only generate clips, InVideo V3 creates entire videos ready for use, and the best part, it's launching in just a few weeks. With the edit command box, you can make real-time adjustments to your videos. Plus, voice cloning now lets you replicate your voice for narration. If you haven't checked out their current version, scan the QR code here or use the link in the description down below to try it for free. Paid plans start at $20 a month, so use my code to get 2 times video credits in your first month. Get started today. Yeah, we'll come back to gold and Bitcoin, the dollar, in just a bit. I know you've got a lot of thoughts there. By the way, people should remember you also ran for the Senate in Connecticut back in, I think, 2010, right? Was it?
Yeah, it was a long time ago.
Things were very different back then, right? But I think you also campaigned on the premise of cutting government programs, making things more efficient.
My entire campaign was I wanted to cut spending. I didn't promise to cut taxes, because I understand that the real tax that the government imposes on society is what it spends. And so that's spending. So that's taxation. So right now the U.S. government spends about $7 trillion a year. So that's the tax on the economy. Now, what Trump ran on was cutting income taxes. Well, okay, but if you're not going to cut spending, you haven't cut taxes. So what Trump really wants to do is replace the income tax partially with tariffs. But he's pretended that Americans don't pay the tariffs that the Chinese do, or the Russians, which is not true. The tariffs are on Americans, not on anybody else. But the tariffs aren't big enough to offset all the tax cuts that he's promised so many people to get elected. And so we end up paying for government with more inflation. Right? That's what he doesn't want to say. And in fact, when all the Republicans, including Trump, blame Biden for all this inflation, right, they bear a lot of the responsibility. Trump pointed out, and the Republicans, that you're getting inflation because of all the deficit spending under Biden. Well, we had big deficit spending under Trump. Why doesn't that count? The thing is that the deficit spending and the money printing when Trump was president, we didn't see the effects on prices until Biden was president. And so what we've really had over these last few years is the Trump inflation. Wait till we catch up to the Biden inflation. That's still coming. That's because there's a lag here between printing all that money.
Let's talk
and
about
the effect
that.
it has on prices.
The Biden administration 2021, was that Biden's fault or the Fed's fault? Let's settle this.
Well, it takes two to tango, but I mean, I've always put more blame on the Fed for enabling the policy. And now not only does the Fed enable the policy, but Powell refuses to criticize the policy. I mean, Powell is hanging, behind this supposed independence of the Fed to say that we can't even speak critically of the government, that's not what an independent Fed is. An independent Fed doesn't mean that you don't criticize the government and you don't comment on fiscal policy. An independent Fed means that you are free to criticize the government and to comment on their fiscal policy when you think it's bad. That's why the central banker is supposed to be independent. So he can speak freely without fear of reprisal, right? But to say, oh, we're independent, so we have to keep our mouths shut, and we can't talk about any mistakes that we believe the government is making. We can't comment on the deficits, that is sheer nonsense. And if you go back to Paul Volcker, who everybody agrees was a good Fed chairman, he was very critical of the government. He didn't have any of this BS that he couldn't comment on fiscal policy. He commented on it all the time.
I want to just touch on inflation because you brought it up. Under the last Trump presidency, this is the CPI. We had inflation. He came into office in January 2017. So throughout his presidency, we had inflation hovered between 2.5 to, obviously there was the pandemic, and then there was deflation, and then we know what happened post-pandemic. So basically by the time he left, it was range bound until the pandemic happened. Basically. And so the argument that tariffs are going to be inflationary, yeah, that makes sense in theory. But if you just look at his last presidency, it wasn't really until the pandemic hit. First of all, you evaluate that, please, whether or not tariffs were actually inflationary for Trump back in his first presidency, and what could be different this time if let's say things weren't that bad that time.
Yeah, you got to remember that the inflation is the expansion of the money supply. So rather than looking at the CPI under Trump, you got to look at the money supply under Trump and see what was going on there. Because price increases are the lagged effect of that inflation. And also, inflation can prevent prices from falling. Falling prices are a good thing, right? It makes things less expensive. Everybody wins. But inflation could prevent prices from falling. That doesn't mean it's not doing harm. It's making things cost more than they otherwise would have. But we were going to get a lot higher inflation even if we didn't have the pandemic, based on the policies not only of Trump, but on the policies of Obama, who preceded Trump. The Fed was doing QE1, QE2, QE3. And they didn't even start raising interest rates really until after Trump was elected. So, by the time he got into office, there had been 2 hikes, but I think both of them were after the election. And so up until the time really, Obama left, rates were still at 0. And of course, they quickly returned to 0 later in his presidency once COVID hit. But I think the reason that you're not going to see the low rates of CPI that we saw during his first term is all the pent-up inflation is now surfacing, right? All the years of money printing is now showing up, in consumer prices. And I think that is going to accelerate, especially when the Fed goes back to quantitative easing, which I believe they will, because I think that the only way that they can stop long-term rates from rising is to go back to quantitative easing. Right now, they're still doing, quantitative tightening. They've tapered it a bit. But, ever since the Fed cut interest rates, now they've cut interest rates 75 basis points, long-term rates are up almost that much. and they're going to keep rising, especially if people expect this, stronger economy under Trump. Well, if we have, even if the Fed is able to reduce the short-term rates to 4%, there's no reason that a 10-year shouldn't be 6%. But the problem is the economy can't handle those higher rates. The mortgage market, everything would buckle if the Treasury got up to 6%. And I think a lot more banks would fail because a lot more. The banking system is very insolvent right now, thanks to all the low yielding debt that they own, that they accumulated when rates were at zero. The Fed averted another financial crisis when they stopped hiking rates last time, and they bailed out like Signature Bank and a few other, the Silicon Valley Bank, or a few banks that failed. A lot more would have failed had the Fed not stepped up. But the whole system is insolvent. So I think the Fed is going to be forced to go back to quantitative easing because the rate cuts are not going to be enough. But the Fed is going to be going back to quantitative easing as inflation is picking up. That's why at the last press conference, a reporter asked Powell, hey, what's your plan for stagflation?
Yeah.
And the answer was to laugh it off and say, well, our plan is to hope we don't have it.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan.
That's right.
Because they know there is no plan because there's nothing they can do. But that's exactly where we're headed. I think we're already there. The Fed just doesn't want to admit it. It's just going to get worse, and it's not going to go away under Trump. We need some serious structural reforms in the economy, and the only way we can get them is if we stop spending and borrowing. The whole time the Fed was supposedly fighting inflation with tight money continued to be loose because debt went to all-time record highs. Government debt, all-time record highs. Household debt, credit card debt, record highs. Trade deficit, record highs. Budget deficit, record highs. Everybody is borrowing and spending despite the rate hikes, which proves that the Fed stopped too early. They never raised rates high enough to do the job. They never actually got into restrictive territory. In order to restructure the economy in a way to have sound economic growth, we need much higher interest rates. We need a lot more savings. We can't have record low savings. People have to stop buying stuff on credit. We have to have, but Trump wants to add more air to the bubble. He wants us to get tax cuts and keep spending. And so that can't solve the problem. To solve the problem would require the opposite of what he campaigned on. We need some austerity. We need to tighten our belts. We need to concentrate on cutting government spending and not just waste, fraud, and abuse. Everybody is in favor of cutting waste, fraud, and abuse. The problem is you can never identify too much of it because there's a constituency behind all that waste, fraud, and abuse that doesn't want it to end. So you can never really make much headway. Even Ronald Reagan couldn't get spending cut. He campaigned on, we're going to eliminate the Department of Energy. We're going to eliminate the Department of Education. Well, they're still here. Reagan's gone, but those departments that he ran on eliminating are still here. So people get all excited because of all these promises. It doesn't happen. Congress doesn't deliver. When I ran for Senate, I said, look, I'm going to slash spending. And one of the things I said I wanted to do is I wanted to lead the filibuster in the Senate to block raising the debt ceiling. I didn't want any more debt, and I wanted to use that to force the government to cut spending. But they didn't do it. I used to support this coalition to cut government spending. I think they're still around, but nobody cares. Talk about cutting spending.
It's not a popular policy, Peter, to cut spending. Nobody wants to hear that government's going to spend less money, right? I mean, maybe in theory, it's a sound economic principle. But okay, let's assume you're right. He's going to continue spending money. What is he going to do with the government, though? He wants to make the government more efficient. He's going to hire Elon Musk to lead some sort of efficiency commission. It's happened before, but I'll let you evaluate whether or not that's going to have any real effect.
Well, look, governments by definition are never going to be efficient. Right? In order to be efficient, you need free market forces. So Elon Musk bought Twitter, and it was his company, and he said, okay, I'm going to cut costs. I'm going to fire people. I'm going to, because it was his money at stake, right? So when you have a private enterprise that is guided by profit and loss, and then you have competitive market forces, you have efficiency, because the inefficient companies are driven out of business by the efficient companies. And because the people that own businesses don't want to lose their money. So they try to be efficient. Governments are not subjected to those forces, right? When you're in Congress, none of it is your money, right? It's all taxpayer money. And your motivation is actually to spend as much of it as possible because that's the source of your power, right? And there's no competition. Government isn't under a competitive threat because you got to buy government services whether you like it or not, right? They take taxes whether you want to pay it or not. So you don't have market forces. It's actually the opposite. Governments are incentivized to spend as much as possible because, you look at these governments, their budgets, if they don't spend everything, their budget gets cut. So a lot of times at the end of the year, any money they haven't spent, they just rush out and spend it because they want to make sure they get their share of the pie in the following year. So, if Elon Musk gets in there, he's going to find it's very, very difficult to actually cut. But if you look at the stuff that's off the table, that's 80% of the government that they're not even going to touch, right? Which is national defense, which they still want to increase, right? Interest on the debt, which is on autopilot going up at a rapid pace, right? 1.1 trillion. In another year and a half, it'll be 2 trillion a year interest on the debt, right? They can't stop that. That's just going way up. They won't even be able to cut enough in discretionary spending to offset the increase in the cost of the national debt all by itself. But then you got Social Security and Medicare that are skyrocketing in cost. Those are off the table. In fact, so is Obamacare, Medicare. He didn't talk about any cuts to health care. So that's most of the budget. And then what's left, if you look back at the history of governments, and I'm 61 years old, and I remember so many attempts, usually led by Republicans, to cut spending. And it never happens. I mean, sometimes they pass these bills that call for spending cuts 3, 4 years, 5 years in the future that never materialize because before we get there, they get rid of it.
Would it be easier this time under a red sweep, though?
No, Trump won the House and the Senate in 2016.
Right.
He had everything for those first 2 years, and they increased government spending. They didn't cut government spending. They did cut taxes, and I have no doubt in my mind that they're going to cut taxes again. And the tax cuts we're going to get this time are going to be much bigger than the ones that we got last time because he's going to extend all the original tax cuts, right? So we get that tax cut all over again. Because right now, if you look at the projections that the government has for future deficits, they assumed that the tax cuts don't get extended, right? So that's part of the budget. So the minute they extend them, right, you blow out the CBO's estimates. But they want to bring back the SALT deduction that they took out the first time. And they want to make corporate rates even lower. So it's going to be a bigger tax cut when we're already more broke, right? The national debt, when he comes in, is going to be well over 36 trillion, maybe 37 trillion. When he came in the first time, it was still under 20 trillion. Not that that was small, but America is more broke now, right? Yet we want to let the taxpayer off the hook with even more tax cuts when they should be having tax hikes, unless we're going to, slash spending, which we're not going to do. But in addition to all those, he never talked on the campaign trail the first time about exempting Social Security from taxes. That's a huge increase in Social Security benefits. He never talked about no tax on tips or no tax on overtime or no tax for teachers, no tax for firefighters or policemen or veterans. I mean, you're talking about an enormous amount of money. Yes, he's promising tariffs, but we still have the old tariffs. The tariffs he put in initially, most of them are still there. Biden never got rid of them. Now, those tariffs didn't turn the economy around before. They didn't even turn our trade deficit around. We have record trade deficits with those tariffs. The trade deficits didn't go down. We didn't bring manufacturing home. We've been in a manufacturing recession for years. And so the tariffs aren't going to change that. They may even worsen that. So there's a lot of problems that, everybody is overlooking with all the, euphoria, particularly market euphoria. Because, again, the markets get way ahead of itself because, the markets will do anything if people are betting on it, right? Money is flooding in, but they're betting on something that's not going to happen.
Well, what about the argument that bigger tax cuts this time will incentivize more economic growth? And so perhaps the government will make more money not indirectly, directly because of tax cuts. And that will probably offset some of the spending. What do you think?
First of all, most of the tax cuts are geared around giving people more money to spend. So the way tax cuts are supposed to actually grow the economy is not by stimulating spending and consumption, but savings and investment. But cutting taxes for retirees and waiters and waitresses, bartenders, whoever works on tips. I mean, most people that earn tips, are not, they're struggling right now. So they'll just use the extra money, to pay their bills. That doesn't grow the economy. What grows the economy is more investment, more savings, investment. We're not going to get that much of that. The marginal tax rates, even though they come down, they're not coming down dramatically. But you also have to look at the impact of the larger deficits on restraining economic growth. Because when the government borrows money, all of that money is at the expense of investment. Because the government has to tap into the pool of savings that might otherwise finance real economic growth. So when the government cuts taxes and borrows money, almost all the tax cuts go to fueling spending, and all the deficits take away from investment and economic growth. So it's not true that you could just slash taxes and have economic growth if at the same time you have larger deficits. The way to have economic growth from tax cuts is to also cut government spending, so you don't negate the benefit of the lower taxes with higher deficits. And I think the bigger deficits actually are a bigger drag on the economy than the tax cuts or stimulus. So what will actually happen if we get these tax cuts? We will get bigger deficits, but we will also get bigger trade deficits because people are just going to take their paychecks because they have more money now because they're paying less taxes, and they're going to buy more imported products because that's what we got to buy, right? Because we're not making the products; they're being made abroad, and so it's not going to work. Right, it's just gonna the nominal numbers could go up, but we've been having this fake economic growth ever since the 1990s with Alan Greenspan.
Well, what do you mean fake? What do you mean fake, Peter?
Because all we do is get higher numbers, right? Like the Dow Jones, and it's a little bit better now, but the Dow Jones so far since 2021 is up a little over a little over fourfold, and gold is up eightfold. So, what does that tell you is actually happening? The market was going down. The GDP, if you measure it in gold, real money, has been collapsing. But if you measure it in fake money, in dollars, the GDP is going up. All the pundits, especially the Democrats, they can't understand why Harris didn't win. Because the economy is so great. Just look at the government numbers, and that proves it. Look at our strong GDP. Look at our low unemployment. All these numbers are a function of inflation masquerading as growth. The real economy is weak. It's been weak for a long time. That's why people are struggling. That's why they have no savings. That's why people are working 2 or 3 jobs just to pay the bills. Yeah. Despite the fact that they tell us that the GDP is up and the economy is getting better. So, yes, we can get more fake economic growth, but at the end of Trump's term, and all the problems he was elected to solve will just be worse. And now we're going to have to elect a Democrat because now we need change, right? We keep going Democrat, Republican, Democrat, because you always want to throw the bums out. Because the problems keep getting worse, because nobody wants to actually solve them, because solving them requires some short-term pain. Trump didn't promise any short-term pain. He said, you elect me and it will boom immediately. It'll be a huge economic boom and you're all going to be rich. That was what he was selling to the voters.
Yeah, he did say we're entering a golden age of America. That's what he said in his victory speech. Speaking of gold, I'm glad you brought up gold. Let's talk about gold and the dollar and Bitcoin now. Gold, new all-time highs throughout the year. It didn't like the Trump victory, though. I know it's only been a week, but gold's down. And in particular, the day of the election, it went down a lot when Trump was announced as the victor. And this is what happened with the dollar. So, the dollar's up, gold's down, makes sense. But why is the question? Why doesn't the market like gold on the back of a Trump victory?
Well, because again, everything is risk on, right? Gold is risk off. So people think the U.S. economy is going to boom. The stock market's going to boom. Why do I want to own a safe haven like gold when I can make a fortune in the stock market in this booming economy? They also think that the strong economy is going to mitigate the rate cuts. So we won't get as many rate cuts as the market might have thought. So they think that higher interest rates is a negative for gold. Yeah. Also supporting the dollar. We've had a big rally in the dollar since Trump won, and so that is weighing heavily on gold. Also, we've had some comments, and speculation that the BRIC nations and other nations that were moving away from the dollar are now going to embrace it because they don't want to piss off Trump because he's threatening all these tariffs. And so maybe because now we got, a new sheriff in town, that the move out of the dollar is going to slow, and that the central bank buying of gold, because if central banks try to be more friendly to the dollar to appease Trump, and hey, we're not selling our dollars, right? Don't tariff us. Look, we're your buddies. If they're going to stop that, if they're going to stop selling their gold, their dollars, they don't have to buy as much gold. So there's a lot of reasons that people are thinking, hey, this is going to be bad for gold. Now, look, gold went up by about 40% during Trump's first term, about 10% a year. And so it wasn't like, gold didn't do well when Trump was president. But I think it's actually going to do a lot better, despite what the markets are saying right now. I think the markets are wrong again on this. I think a Trump presidency is very inflationary, but that's not bad for gold because the Fed is not going to fight the inflation. In fact, if it tries, the Trump administration is going to beat up the Fed pretty bad, and then put a lackey in there when Powell's term is over, if Powell doesn't cooperate, because Trump wants low interest rates. If you remember, when he was president the first time, he was very critical of Powell for raising rates. He demanded lower rates. He wanted rate cuts. He wanted negative interest rates. He was upset that Europe had negative interest rates and we didn't. He wanted more quantitative easing. And the only way to finance these tax cuts without skyrocketing long-term interest rates is to go back to quantitative easing. So I think that this is going to be an inflationary, 4 years. And I think the short-term impact of the tariffs, of kicking out the illegal immigrants and the tax cuts is going to accelerate an inflation that was already on the rise. So I think the dollar's rise is going to be short-lived, just like gold's decline. Now, by short-lived, could it go on for weeks? Could it go on for months? Sure. I don't know. I don't have a crystal ball as to when the markets are going to turn. Now, Bitcoin, right? Bitcoin is rising. And it's interesting because with everything that I'm describing, you would assume Bitcoin would be going down, right? Because Bitcoin was sold to people as, hey, this is a safe haven asset because the U.S. dollar's in trouble. We have big deficits. We're going to have a lot of inflation. They're going to print a lot of money and buy Bitcoin because it's a better store of value than gold. It's digital gold. Well, actual gold is tanking. So why isn't digital gold tanking? Because Bitcoin isn't digital gold. It's really anti-gold. Bitcoin is a risk-on asset. But the reason it's rising now is because everybody expects the Trump administration to basically do all these great things to get people to buy Bitcoin, such as eliminate all the capital gains taxes on Bitcoin. Hey, you can make a lot of money on Bitcoin. It's all tax-free. And they're thinking that they're going to start a U.S. Bitcoin reserve, and they're going to go into the market and print even more money, create even more inflation to actually buy Bitcoin. Like the last thing we need is the U.S. government to go into deeper debt to buy nothing, to buy worthless tokens. But that's great for the people who own those worthless tokens because they can sell them to the U.S. government, who doesn't give a damn how much money they lose buying these things because it's not their money. And what they'd be doing is they're rewarding people who voted for them. Trump, when he was president the first time, said Bitcoin was a scam. He said it was a fraud, said it wasn't currency. Its value, it had no value. Its value came out of thin air. That it was a threat to the dollar, to the U.S. financial system. He couldn't have said more negative things about Bitcoin. Why did he change his mind? Did he really have this epiphany? No. He changed his mind for the same reason a lot of other people have done a 180. It was the money that corrupted him. So he wanted to run for president. And these Bitcoin guys are like, hey, you promote Bitcoin and we will write you huge checks. We will be your biggest donors if you just come out and support Bitcoin. And what Trump needed were young voters, because the Republicans don't do as well in the young demographic, because usually you need more life experience to be a Republican, right? There's an old saying, if you're not a Democrat by the time you're 21, you don't have a heart. If you're not a Republican by the time you're 28, you don't have a head, right? So younger people, they're naive, they're idealistic, they believe all this BS by the Democrats. But there's a lot of young people who own Bitcoin, and Donald Trump promised to make them rich. Vote for me, and I will buy your Bitcoin, and you'll be a millionaire.
Donald Trump wants a Bitcoin strategic reserve. You're right. But why didn't he on the campaign trail said he's going to add to the existing gold reserves that already is supposedly, in the Fort Knox? But anyway.
Yeah, they want to establish a Bitcoin reserve, but there's no point in having a Bitcoin reserve, especially strategic. There's no strategy.
But my point is, why not prioritize gold? Why not add to their gold reserves? Why aren't they doing that?
The U.S. government is not going to add to the gold reserves, because it would just mean we're going to have bigger budget deficits, and we're already broke. I mean, the government, the U.S. government's not going to buy any gold. I don't think they're going to buy any Bitcoin either. I mean, I think that's one campaign promise that's not going to be kept. In fact, Trump himself never promised to buy any Bitcoin. It was RFK that made that promise. Trump promised to set up a reserve with the Bitcoin that they already hold. My feeling was, and I still think that this will happen, I think the Biden administration is going to sell that Bitcoin before they're gone. So, I mean, and this rally is a great opportunity for the U.S. government to dump the Bitcoin they have, while they can. But I forgot what your question was now.
Well, my question is, why are they not? Well, you answered it. My question is, why are they not adding to the gold reserves? Right? I mean,
and again, because the gold industry didn't donate a bunch of money to the Trump campaign. I mean, it's this was all patronage. I mean, Trump was pandering to voters by promising them to give them something. I mean, I really thought it was almost the low point of the campaign, and maybe in political history. It was an outright bribe, right? You vote for me and I'll buy the asset that you own, right? I'll buy what you own to drive up the price so you could sell it and make money. I mean, it was really horrible when you think about what that promise. Kamala Harris was trying to bribe voters differently. You have a kid, I'll give you $7,000 a kid. You have a business, I'll give you $50,000. You want to buy a house, I'll give you $25,000 for the down payment, right? It was a bidding war. But most of Trump's giveaways were in the form of tax cuts, or I'm going to buy your Bitcoin, right? But it's all the same thing. You're buying votes. And now the election is over, and some people expect to get paid. Hey, I helped you get elected, so you owe me, right? I mean, that's the problem with democracy. Now, again, a lot of people are going, Trump's not going to be able to keep all these promises, but I don't think Trump actually believes any of this BS about Bitcoin. I don't think he's changed his mind. I think what he said in 2016 and 17 and 18 is what he actually believed, because he wasn't running for office. There was no Bitcoin lobbying group, so he spoke his mind. Now I think he just told a lie, because that's what politicians do. You tell people what they want to hear, so you get their money and you get their votes. And the thing about Bitcoin was, it was a great political position to take, because Trump did not lose any votes by being pro-Bitcoin. The people who don't own Bitcoin, they didn't care. But he gained a lot of votes by the people who own Bitcoin. That's why Kamala Harris's position hurt, although she tried to change her mind. Oh, I like Bitcoin too. But she lost a lot of voters, young voters, who might have voted for her, but they want to get rich on their Bitcoin stack.
No, I get that. forget what Trump believes himself. Let's talk about what the government may or may not do and the impact on the price of Bitcoin. So you don't think they're actually going to set up a strategic reserve?
No, I don't think they're going to do it, but I think there's going to be speculation that they're going to do it, and that's what's driving the price. So the question is, how high will it go before it collapses, right? Buy the rumor, sell the fact. I mean, it may be buy the rumor, sell the rumor, which is more likely because I don't think there's ever going to be a fact. But it's also possible that the Biden administration dumps a lot of Bitcoin into the market right now, and that could tank the market if that were to happen. And you would think if the Biden administration, right, was at least pissed off, right, that they lost and that Trump won, and they think that one of the reasons was all the crypto money that propped up. Don't you think just out of spite, at a minimum, out of spite, they would want to dump that Bitcoin before they left? Especially if you know that Trump promised not to sell it and to hold it as a reserve. What I would definitely do if I was Biden, before I left office, I would just sell it out of spite. Even though, I mean, I think it's a good thing to do anyway, because the government shouldn't own that Bitcoin. It was seized, in these raids, and it should be sold, right? And the money should be used to retire debt, right? They shouldn't just hodl this ridiculous crypto asset. So they should sell it anyway. But there's a lot of reasons. If I was them, I would want to burn the people that made me lose, that funded my opponent. They still have a couple of months to unload those Bitcoin.
Okay, so you're still bearish Bitcoin even after a Trump win. Is basically the
Yeah, well, I'm bearish long term. Look.
Yeah.
Can the price keep going up? I mean, I've said that before. I mean, the price can go up as long as people are dumb enough to buy it. Now, obviously, the people who bought it, if they sell it and get out, they look pretty smart. But the thing is, most people don't sell their Bitcoin. That's the whole idea. Buy it and never sell it. That's why it keeps going up. People don't want to, but eventually they're going to want to sell it. They're going to want to buy a new car. They're going to want to buy a house or want to take a vacation. I mean, you eventually got to sell. But the other thing that's driving up the price of Bitcoin is you got that madman, Michael Saylor, who says, I'm going to buy $42 billion worth of Bitcoin. So people want to front run that. People want to buy Bitcoin to sell it to MicroStrategy. And where is MicroStrategy going to get $42 billion? Well, they're going to dump $21 billion worth of MicroStrategy stock that keeps soaring every day because they're going to dilute it and buy Bitcoin. They're going to sell $21 billion worth of this stock to buy Bitcoin, and then they're going to borrow $21 billion to buy another $21 billion.
The solution here is to announce you're going to buy $2 billion worth of gold, and then people will front run gold. You should announce that you're going to buy $2 billion worth of gold, and then people will front run gold and push it up.
Well, first of all, I don't have $2 billion to buy gold. And even if I was going to buy $2 billion worth of gold, it really wouldn't move the price that much.
Yeah.
It's a real
fair enough.
market.
No, I was joking. But what about emerging markets, Peter? I think you've liked emerging markets in the past, correct me if I'm wrong. What about under this Trump administration? The dollar going up is not great for a lot of emerging market debt that's denominated in dollars.
Yes. I mean, if the dollar keeps rising, that is negative for emerging markets, right? It's because I don't believe the dollar is going to keep rising. And look, I also think that tariffs, people are afraid that the tariffs are going to hurt emerging markets. The tariffs are going to hurt us, right? Tariffs hurt the most the nation that imposes them, right? That's always the case, right? Now, some foreign companies will be hurt by our tariffs because, they'll have to sell their products to somebody else for less money than they would have got selling them to us. But those foreign consumers are going to catch a break. A lot of people outside the United States are going to get the benefit of our tariffs because they're going to buy goods at lower prices that otherwise would have been sold to Americans, but we're not buying them because the tariffs made them too expensive. But also, I think that if the tariffs are really high, right, a lot of these emerging market countries are going to just develop, better trade relationships with themselves as they buy and sell goods to each other instead of the United States. That means there's less demand for dollars, and ultimately the tariffs backfire and the dollar weakens, and the weaker dollar is good for the emerging markets. And again, to the extent that foreigners don't sell us as much stuff because of the tariffs, they're not going to buy as many treasuries because that's how we pay for our imports, with our debt. right? We have a $1 trillion plus trade deficit. And if foreigners aren't selling us stuff, they're not earning dollars. And if they're not earning dollars, they don't need treasuries or US dollar denominated debt. And so I think the rest of the world is going to be a lot better off if they buy less of our debt and loan us less money. And instead, they keep their products. So a lot of the products that are now being produced in factories in emerging markets are going to stay in those emerging markets. And the people that live there are going to get to buy those products. What Americans are going to have is our money. So we're going to print more money and we're going to have that, but we're not going to have all these products that we used to have because they're going to be, outside the United States. So I still, my story on the emerging markets is still intact. I still think they're going to do really well. It's just that, again, you have another delusion in the market. Speculators are piling into dollars, betting on a reality that's not going to exist. And so while that's happening, that does work to undermine those investments in the short run. And so I just think it creates a good buying opportunity for people. I mean, right now you got a great opportunity to sell the Trump trade and fade it, and and buy the stuff that's going down and sell the stuff that's going up.
Okay, so the Trump trade already happened, is what you're saying.
Well, it's
Markets
happening.
going up. It's happening.
I don't know that it's over yet. I mean,
Okay.
It might be. Maybe this is the last day, but it could go on for a lot longer.
Sure.
I mean, I don't know.
Sure.
I do know that it's the wrong reaction. Oftentimes, but on a smaller, time frame, markets will do one thing as a knee-jerk reaction, and then they'll do the other, as the real reaction. And so this could be a knee-jerk reaction that spans many days or many weeks or maybe even many months. But I think when we look back at it, we're going to find that the people that bought into this made a mistake. People crowded into the wrong trade because what everybody is assuming is going to happen is not going to happen. And therefore, the positive things about the assets that people are buying are not going to happen. And a lot of the negative things about the assets that they're selling are not going to happen.
Let me finish off on this clip. You brought up the fact that the Fed has to respond to fiscal policy, but they're not going to fight inflation. So maybe they're stuck, and then maybe the administration is going to bring in a lackey. Who knows? But let's take a listen to these remarkable questions that were asked to Fed Chair Powell last week at the FOMC conference.
Hi, Victoria Guida with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on do you think that legally you're not required to leave?
No.
To follow up on Victoria's question, do you believe that the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
I just want to get your reaction to that.
Well, I mean, I thought there are more interesting questions than those, but it's clear that the reason that Trump would want to fire Powell is because he's not cutting rates fast enough, because he's not doing quantitative easing. So that should be bearish for the dollar. That should be bullish for gold. If Trump really wants to get rid of Powell and replace him with somebody who will just be his yes man, and because when he ran for office initially, he criticized Janet Yellen for being political, for keeping rates artificially low to help Obama. But then he criticized Powell for not doing the same thing for him. And now he wants the Fed chairman to do the same thing for him. It's funny. There are people now saying, hey, yeah, the government should take over the Fed. Oh, the Fed is unconstitutional, which it may be, but not for the reasons they think. But they think the U.S. government should just, be in charge of printing money and interest rates, which that would even be more unconstitutional than what we have now. I did a long tweet about this today, but people don't understand. The U.S. government has no constitutional authority to print money. The framers called that emitting bills of credit. They don't have the power to do that. They can only coin money. And what coining money means is taking gold and silver and making a coin out of it, right? Emitting bills of credit, they can't do. Now, the states are also prohibited from emitting bills of credit, and they're prohibited from coining money. The only thing the federal government can do in the Constitution is coin money. If they can't, if it doesn't give them the power to emit bills of credit, they can't do it. And in fact, the first couple of versions of the Constitution, it was in there. They took it out. They didn't want the federal government printing money. And the federal government also doesn't have the power to make anything legal tender. Only the states can declare legal tender, and they're limited to gold and silver. That's it. That's the only thing that can be legal tender in the United States is gold and silver. But the way they got around the Constitution is they set up the Fed as an independent banking syndicate. And so the Fed was issuing bills of credit, not the government, because the Fed is not part of the government. It's totally separate. And the initial Federal Reserve notes, and that's why they're called notes, they were redeemable in real money, which was gold and silver coins that were coined by the government. But they were notes promising to pay dollars that were made out of gold and silver. And so that's how they justified the constitutionality. But if they try to have the government do what the Fed does, it's totally unconstitutional because there's nothing in the Constitution that authorizes the government to do what the Fed does.
Hey, Peter, great talk. You've been very generous with your time. Appreciate it. Thanks for your outlook. Where can we learn from you?
Well, people can always listen to my podcast, schiffradio.com, on my YouTube channel. People should take advantage of the sell-off in gold and silver. Maybe the sale will get bigger, but go to Schiff Gold and buy the gold and silver that people are dumping right now. And in the emerging markets, in some of the foreign markets. I mean, the foreign markets have all gone down, especially in U.S. dollars, since Trump won. So that's where you should be sending your money. And people should be contacting my asset management company, Europac.com, and talk to my advisors about my strategies, how to take advantage of the rise in U.S. stocks to pare back those positions and to accumulate positions in the international markets, in the emerging markets, in the stocks that are actually going to benefit when the Trump trade reverses and people realize that it's going to be a highly inflationary time period that is going to be destructive of the value of the dollar and very bullish for gold and foreign markets.
So there's a Black Friday sale going on for gold, is what you're saying. All right.
Yes, I don't know. It could get better, but don't look at gift horse. This gold's been going up for a reason, and those reasons haven't changed with the election of Trump.
All right. Well, we'll put the links down below. So follow Peter there. Thank you again, Peter. We'll speak again soon. Take care.
Take care.
Thank you for watching. Don't forget to like and subscribe.